Hi everybody, it is 15th of Feb. The last couple of days have really all been about Janet Yellen. She's been testifying, she made a speech, really trying to give some forward guidance, give people a bit of a clue what the coming year may bring in terms of monetary policy in the US. She said that they're going to, well, she hopes they're going to raise rates. The word was a few times. We shall see. I mean, we thought they were going to raise rates, and we thought they should have raised rates a few times last year. But eventually, she only ended up doing it once, right at the end of the year. So, I'm not convinced. I'll sort of take the stance of I'll believe it when I see it with Yellen because I think she's a bit behind the curve now, and she should have really started to act last year, and we're seeing sort of quite a few signs of inflation, not just in America, all around the world really, and I feel central banks in general are a little bit behind the curve and a bit cautious, and we need to try and get back to a more normal level of monetary policy that encourages saving really, and not just sort of borrowing and spending. It's something that encourages saving and producing things. So we shall see what the year ahead brings. If there are any sort of bumps in the road, I think she'll use that as any excuse necessary to be as sort of dovish as she can with the rates of interest. I mean, if you think about what Donald Trump is promising, he's promising big tax cuts, both personal tax and corporation tax, and he's promising a big infrastructure spending plan. Now, I mean, America's already in a lot of debt, and they've got to borrow more money to finance this. And for that to happen, they need to keep rates as low as possible. So, I mean, I wouldn't be surprised if, well, she may even go back and do a bit more QE. I'd like to think they wouldn't, but it wouldn't completely surprise me. But I think they'll be dovish on rates. They'll have to be dovish on rates because, like I said, they're in a lot of debt. And as the rates start to go up, that debt's going to get exponentially more and more expensive to service. So we'll see what happens. I just wanted to take a quick look at a couple of, before we have a look at the stocks and things, I just want to have a quick look at a couple of commodities instead, because I think these give a good indication of where whether sort of markets, the metal markets, view the way they see the interest rates going up. Now this is gold. Gold, since shortly after the election back here in December, really rallied up from just north of the 1100 an ounce level, and to me that implies weaker dollar, more easy monetary policy, and inflationary pressures. So, yeah, gold's been pretty strong. If it's still a bit at the 1240 level, but I think this could be a fairly strong year for gold. Another stock, obviously very similar, silver. So silver, we're right on this key resistance line here. Silver's been fairly sideways for a few years now. Similar to gold, I think it's a good hedge against inflation, holds its value, and if we can break this level here, this resistance line, I think it could be up and away again for silver. The other one I just wanted to have a look at was oil as well. This is Brent. It's sort of found this resistance around 58.50 sort of level, but it looks to me, with the sort of rising highs, that it may break through there in the end. And these three things, gold, silver, oil, to me, the way they're trading, if they do, silver and oil breaks out and gold keeps going, then that would imply to me that people are banking on easy monetary policy, a weaker dollar, and more inflation, which, with the amount of money that's been printed around the world, would hardly be a great surprise. Anyway, back to the stock markets. The U.S. markets recovered later in the session yesterday, and we've been up. We're a bit off the highs now. This is back in London. This is the FTSE. We have touched 7,300 this morning. We are just off the highs a little bit now, but the banking stocks are up. They're really following the U.S. banking stocks, which I mean, it looks like Trump's going to get rid of this Dodd-Frank stuff, and Yellen seemed to agree with him in the speech yesterday that they were overburdened with too much regulation. So financials really led the way in the US last night. If you see, these are our banking stocks here on the left. Standard Charter, which has had an incredible run, really. It was down at £6 not all that long ago. I mean, that's really rallied back. I mean, HSB back over £7. We'll have a look at Lloyd's as well again in a second. So this is the FTSE. It's very similar to how, it looks to be similar to how this move went. A real, what I would call like up a grind line, right up that sort of way. So we may be doing something like that. For anybody who did or looked at the trade I did buying the March 73.25 FTSE calls, I've just checked on the price, they would be, if you were to sell them now, you were holding them, they'd be 36p to sell. I think we bought them for about 21p. So I'm going to hold on to those for the moment. Sterling's down a little bit, it's back down, not that much over 124. The US stock futures are up a little bit, so I'm gonna hold on and see what happens in the next day or two. I could do with another maybe 30 or 40 points on the index, and there'd be a nice healthy profit at that point in that trade. In terms of other UK stocks, this is one I'm trading at the moment. This is Lloyd's. It announces next Wednesday. Something's going to happen. It's going to go one way or the other. My suspicion would be for it to go higher. Results seem to be getting better over the last few announcements. I mean, it may already be going a bit early here. We'll see. But obviously, it's key how it closes today. I mean, this doesn't mean too much at the moment. Another one I'm watching is National Grid, utility stock. It's a good solid stock. It tends, as you can see here, it's had a big move there, but it tends to be fairly steady. Pays a good dividend. It's a good sort of blue chip stock that the sort of pension funds, investments funds buy. So I'm looking for it. If it gets to back down towards the 920 sort of level, I'll be looking to sell some puts in National Grid. Other than that, I've sort of what I'm watching Shell and BP. Really, is sort of with the proxy of the way the oil price looks to be, if it breaks out. This is Shell B, of course. It's in this nice sort of channel. It's making higher highs, higher lows. It's trading pretty nicely. So, I mean, I may take this trade today. If I do, I'll do another video about it. I may sell some puts in Shell today. Similarly, BP, trading in a very similar pattern to Shell. It eventually broke out of this sort of 360, 380 level. It's a bit wild, the price action at the moment. I'd like to see a bit sort of narrower swings, but you get the idea. Look at that channel. Again, this may be something I'm seriously considering doing today on BP as well. Probably selling some puts in that as well. Other than that, that's about it. And we'll see what the rest of the day brings.